right, well, we have a good meeting starting. First up, we have Michael Warhead. He's a certified general appraiser for the state of Ohio. He's a real estate broker of 40 years. He has a teacher at Sinclair, and I can tell you that I actually had him as my teacher when I took my license for become a realtor. So let's welcome Mike to the stand. Give him a warm welcome.
That's all right. Good evening, everybody. I got a call last night, said, we got an investment group that's going to be meeting at the Board of Realtors, and we'd like to have an appraiser come by and maybe talk a little bit about, some of the concerns you might have in investing in residential real estate and in real estate in general. I would imagine most of you are residential type investors. Is that correct?
Everything.
Everything? Okay. Well, I think what they really want me to do is, first of all, talk about, when you're buying a property from an appraiser standpoint and from an investor. Then I'll go into the rehab, the fix-up, some of the things that, would affect value, and some of the things that, don't affect value. And then if I can talk a little bit about marketing the property, if you like. Doesn't have anything to do with appraising, but then any questions you have, I'd like to open it up to, see if you, I've been around a long time. I bought a lot of houses over the years, the sheriff's sales, and flipped them myself. So I know what you're going through a lot of times. I can just kind of give you some of the thoughts I had when I was doing that, and you can go from there. I don't know, on residential, I've had people, like I said, I teach at Sinclair College, and if you were a licensed realtor in the last 30 years, you probably were in one of my classes there. So, but I've had people there that buy and sell houses. And the thing about it is, I would imagine that some of you are buying houses in the $20,000, $30,000 range, and I've had people buy them up as high as $250,000. So, as an investor, you have to decide, what's your niche in the world, and, then you worry about the risk from there, okay? I would imagine most of you are in the lower, the $20,000 to $50,000, maybe going up a little bit from that. And that, in investing, and I'm just talking again from the buying part of it, they always say in residential or in real estate in general, it's location, location, location. When we were buying and selling houses, and probably better than me in this day and age, there's houses out there that they'll literally give you the house. But I always suggested, if they give you the house and it doesn't, and you can't rehab it, or you can rehab it, but you can't sell it, what good is that? So we always looked in a good turnover area. We looked at the market out there. We looked at the resale, what's available, what's sold, and the price range, for that. And the reason I like to talk about the price range is because when you go to buy that house, when I talk to people about my son-in-law, for example, he listens to me a little bit. He's bought like 4 houses, and what I always told him, I said, if you see a good deal out there, probably turn it down. He goes, looks at me crazy. I said, because you're talking about flipping. I said, because you need a great deal. Because I'll tell you why, folks, and if you've been buying and selling residential real estate, there's always surprises. There's always something you get into that you end up didn't anticipate, because you tear one thing out and you find there's another problem there. It takes you, instead of turning it over in 60 days, it took you 6 months or something. So there's always a surprise there. So I always tell them, look at the value range of the neighborhood. If that neighborhood is somewhere, let's say, $60,000 to $75,000. Okay? And you're buying this house, and you can pick it up for $35,000 or $40,000. Okay? Sounds like a great deal. But if you have to put $15,000 in it, then you got to pay a commission, and then you got